Welcome to today's Perspectives by AirInsight. Our webinar today is on business aviation and COVID. I'm Ernie Yarby, president of AirInsight Group, and I'd like to thank you for attending our session today. Today we've got an opportunity to hear some expert perspectives on the business aircraft sector, assess the impact for a potential faster recovery for business aviation on the industry than the commercial side. So we've been seeing some upticks and a few good signs as those who can afford it would probably prefer to fly privately than commercially these days. Give you a chance to ask questions of our panel of experts, and we've got a great panel today. And promote discussion about the future of business aviation as we emerge hopefully soon from this COVID-19 pandemic. We've got a great panel for you today, and we're starting with Brian Foley, someone I've known for more years than we'd like to admit. What is it, in the 1980s or 1990s that we first met Brian? It's been 30 or 40 years. Brian is a consultant in the industry, assisting both participants in the investment community with market research, analysis, forecasting, due diligence, and strategy. He's an expert witness and also one of the gurus that people call when they need information on where the aviation market is going. So thanks for being with us, Brian. Paul Cardarelli is one of the pillars at JetNET, which is a great information storehouse of everything business aviation. Paul's one of the founders of the company. He's been with them for many, many years, and launched the JetNET IQ Business Aviation Forecast Service. And I think we'll see something of that today, and let Paul explain a little bit about what that is as we go along later. Paul is a delegate to the NBAA Leadership Council, a member of the Business Aviation Subcommittee of the TRB, and has multiple roles in the industry. So welcome, and thanks for being with us, Paul.
Thank you.
Our third panelist is Travis Kuhn from Argus. Is it still Aviation Research Group US, or is it now Argus because you guys are international, Travis?
It's all Argus now.
All Argus now, but it started out differently way back when.
Yep.
He serves as head of market intelligence, and he has a forecasting model that they've launched to predict business aviation flight activity up to 6 months in advance. So I think that'll be useful as people look at when and where the recovery is coming from and how things look in the industry. And Travis is also an air transport pilot with 3,500 flight hours. So he knows things from both the market side and the cockpit side. So with that, we'd like to begin our session, and I'd like to get each of our panelists to do a little bit of an opening statement. Some have slides, some don't, and we'll start with Brian, who doesn't have a slide. But we'd like to ask you to provide us with your perspective on the crisis. How long is it going to last? Where do you think the business aviation sector is headed, and what kind of changes we might see as you look toward the future? So we'll let you freeform that, Brian, and be the first to answer. Brian?
You may have an internet problem, Ernie.
We may have a problem. Well, let's start with Travis. Where do you think the industry is going, Travis? And what's your perspective there?
Yeah, absolutely, Ernest. I think in order to see where it's going, we need to think about where we've come from and what we used to see as normal. In 2019, we averaged about 260,000 business aviation movements a month in North America. And then we reached the end of 2019 with October of 2019 proving to be the most robust month in terms of flight activity that we had seen since March of 2008. And that's a key month because that was the start of the downfall for business aviation in 2008 and 2009. We hit 2020. All indications were that we were going to continue to see growth on top of growth for the year. And then, of course, COVID-19 entered in late January and February in the US market. We didn't see it really start to impact flight activity until about March 15th. And in the first week when we saw the stay-at-home orders take effect, we saw activity drop 60% week over week. And that ultimately would lead to a bottom of about 75,000 flights in the month of April, which you can see on the screen there and the numbers. We've since, the few months since, all the way to the end of June, we've rebounded to 192,000 flights in North America. That's a key number because, putting this into perspective, 2008, 2009, because we've heard that question a lot, activity fell 30% from March of 2008 to February of 2009. And February 2009 was both the bottom for business aviation and the Dow Jones. So it took 12 months to drop 30%. From February to April, it took 2 months to drop 67%. So we more than doubled our losses from the Great Recession in 1/6 of the time. So you've actually seen since then more of a V-shaped recovery. In fact, in 2009, from February to September, it took 7 months to gain 21,000 flights. This year, from April through September, a few less months, we're expecting it to gain over 155,000 flights. So the industry's recovering differently. We're starting to see that rate of growth cool. We expected that because as we move in past our initial recovery phase, we're going to start seeing more of the economic factors come into play here. The Wall Street dust is going to start to settle as the financial impact comes into play. We still have international travel bans in place all over the world. So the top end of the market, and we see it in the numbers, the large cabin jets, ultra long range jets, are still down in terms of flight activity significantly, some as much as 40% in the month of June, whereas the small side of the market's recovering faster. So we will be watching that over these next few months. October is a key month on the calendar. We're going to watch it. It's normally the most robust month in terms of flight activity. This year we have an election, which usually brings with it more movements. So our eyes right now are focused on October, but the industry's growing, and it's growing at a healthy rate so far.
That sounds very, very positive.
And then the other slide we have on here that we want to focus on, this is kind of using this graph to focus on where we have spikes in cases here in the US, because this is important to see what we're going to see in terms of impact to business aviation. The top 5 states in a normal non-COVID-19 environment, each year it's pretty much the same: Florida, California, Texas, New Jersey, and Georgia. And Florida, California, and Texas are far and away the top 3. They usually in a given year will see over 250,000 departures in that year. The next closest, New Jersey and Georgia, are right around 100,000. So there's a big gap between those 3. Well, those 3 states right now are also leading in terms of COVID cases right now, outside of the New York area, which has had a real bad epicenter back in April and May. So we'll be watching those states closely. We'll also be watching Colorado, which has improved a little bit. Arizona also came up in activity. They were the 6th busiest state in terms of activity. So we'll be watching all of those states, and those states getting a hand on their COVID cases, flattening their curves now in the second wave that we've seen, are going to be key to maintaining that momentum for business aviation as we move forward.
Thanks, Travis. Do you think that COVID is having an impact in terms of people who can afford to fly privately are electing to fly privately at this point for security reasons? And would that inflate the numbers domestically significantly as we start to come out of the crisis? Do you think this will increase demand or decrease demand for business aviation?
Yeah, that's a great question. I think if there is a positive side to this, it's that I think it will increase demand for business aviation, specifically on the domestic side. In 2008 and 2009, one of the other factors that drove in that in terms of financial was also the black eye that the big three automakers got when they went to DC asking for a bailout flying in G5s. Well, that created a bit of a negative stigma towards business aviation. Now, business aviation is viewed as somewhat of a responsible means to travel in the era of extreme social distancing. So that has had a positive impact. Year to date, the first 19 days of July, activity's off about 18%. So it's already improved 7 points over June, and it continues to improve. So as we maintain this era of social distancing and face mask era and all of that stuff, business aviation is going to shine through, and it's so far done that, and I expect that to continue for the foreseeable future.
Thanks, Travis. Paul, can we turn to you with the same issue, your perspective on the crisis?
Yeah, certainly.
Where it's going and where we're headed. So
absolutely. And by the way, thank you very much for holding this. Glad to participate. I think events like this are great in times of crisis to keep the communication rolling. Let me kind of reserve my comments to primarily the pre-owned market and the demand for new aircraft deliveries. On the pre-owned market side, something we watch very carefully at JetNet, I would describe it as very challenged and yet paused. For certain, I could tell you that, yeah, there are some distinct pushbacks against the pre-owned market now. Inventory is up a bit, pricing is down a bit, and sales have certainly slowed. But I think everything, viewed in context is very important. So let me talk a little bit about that right now. Without a doubt, I think the sellers, the brokers, the dealers of business aircraft are showing a lot of restraint right now, a lot of restraint to not react negatively to the negative stimuli that surrounds the market. And in such, yes, the inventory is up, but it's not up a whole lot. There's not been tremendous degradation of pricing, although pricing is a bit softer than it was last year. And in terms of retail sales, they are fully off 21%, looking at the first 6 months of 2020 versus 19. But that's because I think they are showing the restraint to not jump at the lowball price and fire sale the aircraft. So we're not seeing a lot of distressed pricing yet in the market. Now, I will tell you that the composition of what's selling has changed. So if I looked at the first 6 months of 2020, kind of as a composite of the marketplace, it was typically a 2004 aircraft priced at about $4.4 million. And I didn't really scientifically review this, but just looking at the composition of what's sold, there was certainly a greater number of long-range, large cabin aircraft selling. Hop forward to this year, the first 6 months, that airplane now is about 2 years older. It's more like a 2002 model. It's being priced at $3.7 million, and certainly less of a presence of the larger long-range aircraft models in there. So the composition has changed. Again, some very real, pressures on the market, but a lot of resistance, within the market from the sellers to capitulate just yet. How long they can hold out, we'll have to see. But right now they're holding firm. On the inventory, it's at about 10.27%. I measured it yesterday. So there were 2,307 jets listed for sale in JetNet, equals 10.2.7% of the in-service fleet that's for sale. There will be many that will be quick to tell you, hey, 10% is the delineator between a buyer's and a seller's market. And by that definition, yes, we are technically in a buyer's market at this point, but we're just barely so. We're at 10.27. That's just a bit south of equilibrium in the marketplace. And it's held there pretty consistently since April. It's just been vacillating between 10.2 and 10.3, right along. So again, there's no great spike in the inventory for sale. There's no gross oversupply in the marketplace. And then there's this. The market was really on this trajectory to hit that 10% threshold and perhaps break it going back to last fall. If you went back looking to last fall, the market was already cooling. A lot of the post-recession pent-up demand had been satiated in 2017 and 2018. And we also had a difficult, summer, if you recall, in the stock market. The stock market stumbled quite a bit over the summer. And yes, it did stage a recovery, but it was kind of a shallow recovery, and it was a bit bumpy at times. And then, so we roll into 2020 with these headwinds ahead of us. We're already in a cooling market. And then we have this going on too. It is both the year of Brexit. We had, Britain had ratified the Brexit plan in January. And once again, it was going to be a very contentious, presidential election year here in the States. And in that sense, 2020, looks very much like 2016 when the Brexit referendum was first ratified or passed. And again, we had a contentious presidential election going on. And at that point, those same two things happened. Inventory started to go up, and retail prices on the pre-owned market started to slow. So that's exactly what we're seeing out there right now. We think it does look a bit like 2016, and for sure, COVID is exerting pressure on the market. But a lot of what's going on was actually already in play. A lot of those headwinds were already blowing against us, rolling into January. A couple other notes here. So let me talk about, how we see new aircraft deliveries. This is something we are particularly keen on in JetNet IQ. We think the crisis is going to have, a greater impact on new aircraft deliveries than perhaps the pre-owned market. And certainly the OEMs, they're struggling, amidst this crisis with some real challenges. A number of them are dealing with furloughed work staff. If your people can't show up to the factory floor, they can't be building airplanes. Canceled orders is certainly going to be reality in any crisis of this. And then there's simply going to be the orders that are not going to be realized directly as a result of this. So we think if you look at the market overall, versus last year, I think it was about 725 deliveries. We think it's probably going to be off anywhere from maybe 25 to 28%. Puts us around 600 aircraft business jets delivered in 2020. We do see recovery coming. It's a bit slow. It's a bit of a shallow increase in the next coming several years. We think recovery probably comes about 2025. And when I say recovery, I mean that we return to where we were last year, around 725 airplanes delivered. Long term, we're very bullish on business aviation. We see this being a 900, aircraft delivered market, in about 10 years, about 2029. 10-year forecast. I don't want to give out the specifics, but we see this as certainly 6,300 business jets delivered over the next 10 years. If we put a value on that at about $206 billion. And we're also saying this, watch out, we're putting in a supersonic business jet in the forecast. We think that becomes a reality about by 2026 or so. And we believe there are going to be buyers for those aircraft. So those are my initial comments. Any questions? Oh, and I could run through, yes, let me run through my charts here quickly. The first chart here, this again is some of the underlying concerns that we have about business aviation. There's definitely been a change of behavior post recession. So we look here, and what we've just kind of done here is we're comparing aircraft utilization, which is the blue line, versus U.S. GDP indicated by the green bars. And we can see there the precipitous drop in 2008. We all but parked our airplanes in 2008, for what was, it was certainly a change in direction of GDP, or there was certainly a decline there, but it was not a huge decline. And then we can see that the relationship, if you will, does recover itself, although on a much more shallow trajectory than it had been before. And this is kind of an underlying concern, that we have about the future of business aviation, is that we're not operating our aircraft like we used to. So you see where our, if you look to the far right in 2019, there's our annual cycles, right around about 4.5 annually. To get that number again, I guess we were briefly there in free fall in 2008, but the last time we were on an upward trajectory through that number was already back to 2003. And if you look underneath there, we have the fleet size. So we were operating about the same number of cycles in 2003 when the fleet was about 8,700 aircraft versus where we are today with a little bit north of 22,000 aircraft in the fleet. So, that's one of the underlying pressures, I think, on the industry that we all need to work on. We need to be flying our airplanes more. Yeah. Next chart, please. This is just a quick look at the pre-owned inventory in red versus the retail transactions in blue. And as you can see there to the far left, the two lines start to converge. And as I said, Yes, we are technically in a buyer's market right now, but it's really mostly a market of equilibrium. You know, sales and inventory are about to equal at this point. And just two more quick charts, if you would, Ernie. Just quickly looking at, I thought I would just compare, business jets, pre-owned market, retail sales and leases for business jets. The year-over-year comparison by month. So you can see the blue line indicating the lighter blue line indicating 2019. The navy blue is this year. And you can see, yes, we are lagging behind, in all months but February in comparison to last year. However, you do see that the delta between the 2 years is narrowing quite a bit in June. In June. So we think that's going to correct. And not to forget about turboprops. Again, seeing here kind of the same picture, declined over last year, but we do see some recovery coming in June. That the 2019 versus 20 sales are starting to realign themselves. So those are my comments. Any questions?
We're going to have a Q&A session for everyone later, and if you would use the chat function to submit questions, we'll take those during we'll take those. You can do those during the session, so you don't forget a point if you have a question that you'd like to ask any of the panelists. So please use the chat function and address those to general and to everyone, or to Addison and I, and we'll take care of those at the Q&A session. So please use the chat for questions. And thank you, Paul. That was great. Brian, it's your turn. Can you hear us, Brian? I think we have a stuck video there.
Yeah, sorry, pretty bad internet connection today. Can you hear me? Okay. Yeah,
I can hear you now.
We kind of live out in the sticks here, and I have to climb it. It might not even last for long here. If I need to stop, good.
You might shut the video off, and that might help in terms of bandwidth.
Observations by the first two panelists and up on which way the market is moving. We're not a single industry just selling jets or just leasing jets. There's many different businesses, and they've all been impacted differently by COVID. In no particular order, participants are cheerleaders for the industry, and sometimes then things really are.
You're breaking up a little bit, Brian.
A good example, there's lots of them in that end of the market, and from Paul's chart that we just showed, pre-owned transactions are off by about a quarter for this year. So it's definitely going to be a slower year for those folks. Yes, there's renewed interest by new entrants to business aviation. However, to buy an airplane is a pretty big commitment. So in the near term, it seems most new people are flocking to charter and to other short-term commitments and they might not be long-term players. When I get inquiries at my own office about newcomers, just short-term customers, I'd say, they have a trip they're aware of for their family sometime in August and maybe another one in the fall, and after that they really don't plan to renew. They're trusting that there'll be some vaccine, or that they'll be able to build up courage to get an airliner sooner or later. So I don't see the entrants as being long-term players, although there'll be some to charter or fractional. We saw from the flight utilization numbers that first, we're much better than the airlines. The airlines are still off, I think 70% in the number of flights, I think was the last number I saw. So we haven't been clobbered as hard. We're making a little quicker recovery. But the fact of the matter is, it's still below what it was last year. So although we hear from charter operators saying that they have more inquiries than ever, those are just inquiries. You know, they're not sales. And again, we've heard others that say 50% of their sales are newcomers, but I'd argue that many of those are just short term. And we just don't see it in the utilization numbers yet of charter. It's not higher than last year. So in my observation, it's, you know, nice activity, but it's not, you know, any greater than it was in 2019. So I think charter operators will be the least affected of all the different segments of our industry. But that's to say that they'll still have maybe a little business off this year because the utilization just isn't there. I'm more concerned about the new aircraft manufacturers. And what I've observed there is, by and large, there hasn't been many contract cancellations, because today the quality of their order books, you know, the people who buy are much better financially qualified than they were in the past. So we don't see any widespread cancellations or deferrals. It's just not there. The concern for me is new orders, and those are a little missing. And I'm concerned for the manufacturers that even though their factories were closed for upwards of 3 months, that they still won't be able to sell all of their 2020 positions. And at year end, there'll be a good number of whitetails, you know, basically undelivered planes that were built but don't have an owner. So I see that as a sad note overall. It's sort of good news, bad news. Good news is no one canceled. Bad news is no one has been ordering since then, and I don't see that changing in the near term. So they'll likely suffer. In between, there's other ancillary services in our business. You know, FBOs are one. They're dependent almost entirely on utilization. And again, we're below last year still. I mean, better than the airlines, but still we're below. So let's get real about this. MRO, again, an industry that likes to be cheerful and tell us how busy they were when COVID started, everyone putting their airplanes down for service. And that's great, but I'm concerned that once those come out and start flying again, the utilization is very low and below last year. And for me, MRO will start to sag and slow down, you know, probably over the summer and into the fall. So not a quick bounce back there. So again, many moving pieces to the overall market out there. I'd say no one is hitting a home run. Just some are getting hurt less than others. But to that point, it seems like people have adapted. They've gone after government programs that can help them, you know, bridge the gap. They've found new financial resources. So those that are there today and aren't over leveraged with debt should be fine as things begin to improve next year, hopefully. But in the interim, it's still a few months of tough sledding. I'd argue even for charter, there might have been an initial rush of people trying to leave their bunker down areas to go to other locales, maybe squeeze in a vacation where there's not a lot of people. But I'm concerned just what kind of momentum that'll have after everyone gets that out of their system. You know, will there still be demand in September when many business conferences are still canceled? Our own NBAA is canceled. There's just not as much business activity. You know, it seems to be more leisure now. So there's some concerns heading into the fall for me that this charter demand can be sustained too. So again, a lot of things going on, and we'll keep apprised of them. And we appreciate the other panelists' information so we can try to make sense of it all.
Thanks, Brian. Addison, if you'd like to start with questions for our panel. Well, let me start with the first question. and I think Paul had answered this, when do we foresee business jet traffic and the demand for new business jets reaching 2019 levels? I think, Paul, you mentioned 2025. Travis?
Yeah, we're seeing, yeah, we're pushing it out to about 2025 at this point. Perhaps will be proved incorrect, but I don't think it happens before 2024. I mean, that again has to do with, we are very much an industry in oversupply as it is. Again, I mentioned 22,400 plus business jets in service now. That used to be less than 10,000 just 10 years ago. So we're in oversupply, and that's just going to be the nature of the beast, I think, for the next several years.
Yep.
But it wasn't long ago, I should remind everyone, that producing 600 aircraft was an amazing thing. I think we all got spoiled by the run up to the recession, where we had 1,000 and 1,100 deliveries for a couple of years there. Not very long before, this had been an industry that was 400 and 500 delivered a year.
Yeah. Paul, do you see any difference in terms of areas of the market in terms of oversupply? Are we oversupply in the intercontinental long-range jets or the short-range smaller jets? Where are the gaps?
Well, that's a good question. I mean, looking at our 10-year forecast, I mean, we're still bullish on large long-range aircraft. We still see them as playing a major role, and certainly in terms of the dollars, that really carries the industry. We do see improved activity right now, or improved interest, I should say, in the super mid-cabin aircraft. So good news for Challenger with the 350, Global 280, and Embraer's product. I think it would be the Legacy 500 would be a super mid. We do see lift coming from that segment of the market. There is certainly a retirement cycle due on the light side of the market as well. So light jets. Now, when I say light jets, I do mean the light jet category. I'm not necessarily including the VLJs and that, although they're still players in the industry. But the light jet category, there's a retirement cycle in place past due really there. So I think looking at 10 years, specifically light, mid-cabin, and long-range large aircraft, are gonna really take the bulk of the market. 60%, I would suggest.
Okay, Travis, your thoughts?
Yeah, in terms of activity, clearly, 2020 is a write-off. Most likely 2021, I would say at this point, given the recovery rate and where we expect it to go, 2021 doesn't, it might exceed 2020. It doesn't get back to 2019. I think the earliest in terms of activity in North America will be 2022 in terms of business jet movements. I think that's your earliest. I wouldn't disagree with Paul in terms of 2025 either, because there's a lot of uncertainties out there. And to his point, the market is going to change in terms of the types of aircraft. With that, there are a lot, as he knows, there are a lot of very old light jets out there. And we've got these new longer range supersonic jets that are going to be coming out hopefully in the next 5, 6, 7 years. So it is going to change. We put out at Argus, we put out a white paper about a month ago on normal business aviation movements. And what we were getting at in the article is Thursday is typically the busiest day of the week for business aviation. And in 2019, we averaged 9,999 flights per day on a Thursday. And what we're wondering is, when would we see that average 10,000? We expected to see that in 2020 because with very little change year over year, it should have happened. Right now, the best days we've seen going into 4th of July, post-COVID-19, and we saw a little over 8,300 flights per day. So I think at the current rate of recovery, we can see 10,000 flights per day at some point later this year. There won't be a lot of those days. To put it in perspective, in 2019, in the first half of the year, we saw 39 days exceed 10,000 departures. 2020, we saw 2, and that was February 13th and 14th. And President's Day weekend is usually a busy day on the calendar. So there's a lot of factors at play going forward. Business aviation is going to recover. Brian brought up very good points as far as the headwinds and the other parts of the industry that are going to play a factor here as well. But at the current recovery rate, you're not looking at even normal until Q2 next year in terms of just operations.
Yep. Hey, Brian, your thoughts on on the recovery in operations and demand for new jets?
Yeah, these folks are best to estimate, when activity is coming back and sales. I'll address the big cabin market though. Most of the activity lately has been in the small and medium cabin in both pre-owned and new business jet sales. And I'd point to the fact that much of the world is still closed, or at least has some type of quarantine requirements. So there's not a lot of long range trips coming up right now. Most of them are regional, coast to coast in the US, or maybe just state to state in the US, and the same in Europe. Things are staying close to home. So that's where we see most of the charter and new and pre-owned sales is in small and mid. Also, big cabins are a little stressed for a couple of reasons. First, the emerging markets that really have a need for that kind of long range aren't doing real well today in their economies. The price of commodities are very low, which supports many of these emerging markets and gives them a need to buy large cabin jets. And finally, the price of oil is at quite a low point right now. And it's been postulated that 1 in 5 big cabin jet sales are to an oil related or an oil region part of the world or company. So with the carnage that's gone on in energy, you're not seeing a lot of large cabin sales. So for the time being, long range jet sales will be depressed a little bit, but then once things recover, I could see it doing, 1/3, 1/3, 1/3, small, medium, and large cabin once things get back on track.
Thanks, Brian. Let's start again and with another question. What do you believe the key issues are that business aviation? What are the key headwinds that we'll face in the wake of the global pandemic, and how will the industry solve some of those? And, we can start with whoever wants to take that. Paul is.
Well, sure. I mean, I would almost set aside the pandemic. Again, I'm going to try to be an optimistic and think of this as a short-term problem that ultimately gets resolved. Although, to Trevor's point and to Brian's as well, the full recovery from the pandemic doesn't come all that quickly. The way I see it is I alluded to before, is we're not operating aircraft the way we used to, and certainly this pandemic does not help that. And what has happened as a result is we've seen residual values on aircraft decrease precipitously. So when I came into this, JetNET started in '88, and I started into this, and it was just a household fact that a business jet was generally off 25% after 5 years of delivery from the factory, and that held up pretty much true right up until the recession. And today it's more like 50%, and that's a lot. I don't care how wealthy you are. When you're told that this expensive asset is going to be worth 50% less in a year, that's not an encouraging factor to get you to, run out and buy another one of those. So, we think, if utilization is corrected, and that should stem the tide of some of this decline in residual values, we think that the industry stands to do very well. We do think that can happen. But right now, again, too many aircraft in the fleet out there. It's 22,400, whatever the number was, 470, I think. Fully half of those aircraft are more than 20 years of age. A lot of old equipment out there. And it's that old equipment that I believe is bringing down the aggregate number of all utilization. So, these are things we need to correct. We need a lot of the older aircraft to go away. We need to be flying our airplanes, on a net basis more. And from there, we need the residual value slide to correct itself.
Travis, your thoughts?
I think the biggest headwind, outside obviously of the pandemic itself, which, I'm going to take Paul's point of taking more of an optimistic view here. This will hopefully go away at some point in the not too distant future. The biggest challenges I think are just the fallout from it, on looking at that side of things. The economic standpoint that's going to be here, as we go through with this, and Wall Street kind of settles out, and then the international travel side still, I think, is the biggest headwind. We've got, our numbers and our predictions show business aviation getting back to about 90% of normal by September. Now, there are caveats to that and questions, which Brian brought up, are these more leisure demand versus traditional business? Because some of that is definitely the case right now, and how long does that continue? We've absolutely seen charter operators recover faster than the overall industry. And so if that continues, charter operators will still be down, but they're going to be better. So we'll be watching that closely. But once you get back to that last 10%, that's where you start to see, I believe, the impact of what's going on in just the current world here. Are people actually able to travel to other countries? And what is the nature of some of these companies that operate business jets in terms of financial health? And are they going to shed their fleets? Are they going to move to fractions? Are they going to go to airlines? And a lot of that won't fully be resolved until we have a clear path here on COVID-19, whether that's a vaccine, whether the virus starts to just wear itself out. Those are questions that will remain unanswered for at least the foreseeable future of the next few months.
Okay. Brian, your thoughts?
Yeah. So, once we get past the pain and suffering of having to right size and do with a little less business, we're still an oversupplied market. I'd argue that there's too many models of new business jets, too many manufacturers still. Even in the chart interest in their service, they still discount crazy. It always seems to be a race to the bottom. But no one's really falling out during this pandemic. They're all staying in there. So even when things improve again, I don't see a big change in that situation. But that aside, let's say we get past that. One of the big problems before COVID was the flight shaming scenario, I guess, where you should be ashamed of leaving a carbon footprint behind in your business jet, and you should be using sustainable aviation fuel or SAF, and prior to COVID, that caused a lot of people to run for cover and look at charter instead of buying, or look at a fractional piece besides owning an airplane. So, that won't go away, and I'd say it's gaining more steam even as time goes on. So that'll be one headwind for the industry going forward.
All right. I think we'll have to end our direct Q&A, and we'll take some audience Q&A at this point, as I think the questions are piling up. Addison, I'll let you take over for the Q&A segment.
Thank you. We have a question. It would be interesting to hear the presenter's view on long-range production, i.e. Gulfstream, Bombardier, and Dassault, backlog versus production, ramp downs, recovery, ramp up expectations.
Well, let me take a first run at that. Without getting into specifics, we do feel, that those large long-range aircraft are going to remain the strong driving component of the marketplace. They are under pressure right now. When you can't fly your airplane across an international border, that's not encouraging. It's not a point of encouragement to get you to buy another airplane. But that, again, we're gonna be the optimists and feel that anomaly is temporary, and we do see, that is perhaps the best value proposition when you buy a business jet. The longer you can fly in it and the greater comfort that it provides you, that's sometimes the strongest argument for an airplane.
Travis or Brian, any thoughts?
Yeah, this is Brian. I'd say starting with a good point, that tends to stir the market and increase sales. We have new entrants from Gulfstream, from Bombardier. Dassault is working on a new one and has another one that just came out not too long ago. So that should help the market percolate. What I'm worried about, and I'm always the cranky one in the group here, I guess, is Bombardier's situation. You know, they've since in the last few months become almost a pure play business jet manufacturer. And granted, they have a couple divisions that are still in the process of being sold. But if history tells, when the going gets tough and sales slow down a little bit and they want to increase their cash flow, generally there's some discounting that goes on, and pretty heavy discounting. So that not only affects their own bottom line, but it has a ripple effect throughout the industry and kind of changes the structure of the pricing structure out there for the other competitors. So in the near term, there could be some pretty big perturbations, if you want to call it that, if there's heavy duty discounting, because there's going to be whitetails. And I think the large cabin industry has to sort of get past that before there's some sense of normalcy and production comes back. COVID, fortunately, if there's anything fortunate about it, caused some of these manufacturers to have to close their facilities for a couple months, and that acted as a natural neutron rod, if you will, slowing down the production, so that hopefully by year end there won't be as many whitetails to have to discount, so that there's not the cash carrying costs. So I think there's a lot of unsettled times ahead for that particular category. But nonetheless, once that exits, there's some great new products out there to keep the segment going forward.
Travis?
Yeah, nothing significant to add on to that outside of what Paul and Brian said. There's definitely going to be some significant challenges ahead here, and some uncertainty as to how all of this shakes out. And so, whether it's exciting or not so exciting to watch, either way, things are gonna look a little different in the not too distant future, and we're just gonna see how those shake out.
Okay, next question. What exactly is the real market position and value of hypersonic but business jets? I guess not hypersonic, supersonic. We can follow the same speaking order unless any of you want to feel strongly to jump in.
Well, at JetNet IQ, we've actually, looked at this pretty considerably, and we think a supersonic business jet has a very viable place in the market. As I said, we feel so confident that we're putting them in our forecast, commencing about 2026. Probably by the end of the decade, the notion that they could be 25 or more airplanes a year, I think, is not unrealistic. And frankly, I think the industry needs a real game changer at this point. We're building aircraft, and they keep just bumping up closer and closer and closer to that Mach 1, brick in the sky. We make the cabins, I suppose, more luxurious and all that, but we're really not changing, I guess, the value proposition of a business aircraft until we can make one go considerably faster than any other aircraft in service right now. So we think they're real, and we think they're a game changer, and we think they're going to be good for the industry.
Brian?
Yeah, sorry, I might be cutting up here a little bit. Fast is the only place left to go as far as a new business jet category goes. We've covered everything from a single engine jet with the Cirrus up through the BBJ, basically an airliner business jet. There's no room in between anymore for a new entrant, other than to go fast. That we'll be seeing something in the near term. I'd say 10 to 12 years at the soonest. The FAA hasn't even given guidance on what an acceptable sonic boom is. They're working on the takeoff and landing noise right now, which is a place to start, I guess. But how can a manufacturer even design to a point when the point doesn't exist as far as how loud the sonic boom can be? Arguably, the closest entrant to coming out with something is Aerion. And, what I've read is, their suppliers, including, Boeing more than anyone kind of learn the engineering support on what position they're in today. And I know there's good theater with some, pretty press releases that come out once a month, maybe, talking about fuel or something that's totally unrelated to the rollout of the airplane. But I don't have confidence that'll be out in the next few years because of the situations. But I give them kudos for bringing it as far as they have so far. So long answer to short question is not for 10 to 12 years. And it's definitely a product that would be bought. There's a market for it. I think the typical forecast out there is something like 300 over 10 years or so. So it's a modest forecast, but the first one to market will get the lion's share of that demand.
Travis?
Yeah, I think supersonic is sooner rather than later. And there's definitely a market for it. There's no doubt about it. Anyone, you talk to any billionaire who owns a business aircraft, one of the common phrases they use is they don't buy it because it saves money. They buy it because it saves time. You got an airplane that can travel from New York to Europe in half the time, there's going to be a market for it. So how big that market is, I don't know. I'd leave those estimations up to Paul and the guys over at JetNET, but there's definitely a market for it. And it's going to be here as soon as that it's safe and the technology's there. And I think that's probably, in the 5 to 10 year time frame.
Okay, we're getting close to the end. I'm going to probably slip in 1 or 2 more questions. We've mentioned whitetails before. The question goes, what is the normal whitetail inventory for business jets and what is the estimate right now? So what is normal and where are we now?
Our experiences at JetNet is it's the last metric any OEM ever wants to report to us. So we think that number is a bit nebulous at times. And I think Brian probably has a better sense for this than I do, but I think the OEMs have exerted a great amount of effort, post-recession, to make sure that their order books are far more qualified than they were before, and we're not seeing a whole lot of whitetails at the moment, again that are being reported to JetNet, but again, I would probably defer to Brian as the expert on this.
Brian? Travis?
Yeah.
My response was going to
Cutting
be
in and out. I guess the question, right? Questions on whitetails, and I think it's a bigger problem than we want to admit, or at least have. As Paul said, this isn't something you go broadcasting, but I think first you want 0 whitetails in the industry, and that's generally been the case. The last few years, we haven't seen any buildup of inventory, but I suspect that manufacturers are hustling right now, 2020, and whitetails are almost inevitable. I think it's hard to forecast how high that will get, but I'd say it will be increasing between now and the end of.
Travis?
I'm going to defer to Brian or Paul on that one. And so, they seem to have a better close to the heartbeat of that one than I would.
Okay, another question then. What happens to business aviation post-vaccine when people are comfortable getting back in airliners, but we are still in a recession or the early days of a recovery? Is that being factored into the forecasts? I guess that's a question for Paul.
Well, I think it was Rahm Emanuel who was in President Obama's administration and later mayor of Chicago. I think he said something, I'll paraphrase this, but no good crisis should go wasted. We're very hopeful that the result of this is going to be that a lot more concept buyers come forward in business aviation. Concept buyer being someone who was not, been a previous business aircraft owner. And I actually heard Brian on a podcast, and I think he alluded to this as well, that charter companies are seeing more folks come forward that inquiring about charter that had never done so before. we as an industry would be remiss to not respond to this opportunity, because I think never in my 30 years in this have we had such a compelling argument to say this is a good time if you have the wherewithal to get into a business jet and to avoid what's going on with the airlines. And particularly when you think about what's going on, if you're a frequent international flyer doing long haul across the Pacific, I mean, just about everybody's is retiring their big airplanes. The A380s. I see British Airways is put the end date on their 747s. So the airlines are going to be moving to their business model, which they've been pursuing really post-recession all along, anyways, which is probably smaller airplanes filled up with a lot more bodies. And, I think a lot of people are going to see that is contrary to their better interests about how they want to fly and stay healthy.
Okay. Historically, fourth quarter deliveries can be very strong. What is the anticipated delta between fourth quarter 20 compared to fourth quarter 19? I guess that's either Paul or Travis.
Well, in terms of deliveries, we record right now in JetNet 229 new deliveries, essentially as of the end of June. We see the end of the year going up to more like about 525. So yes, we do see lift. That would be about a 30% increase in the first half of the year, in the second half of the year versus the first half. Now this is all trying to be the optimistic, that says, maybe by middle August, Florida has peaked on the number of recorded new cases, and that we're starting to feel the sense that the virus is that the worst is past. And they're also talking about the vaccine being ready perhaps by late December or even January. In the context of that optimism, we do feel that the fourth quarter, which is traditionally strong in any given year anyways, will be so again this year.
Okay, thanks, Paul. Ernie, I think it's time for us to wrap, so I hand back to you. Ernie? Oh, Ernie.
Can you hear me now?
Yes.
All right, we're back. Let me get back to the slides here. I'd like to thank all of our participants for being with us today. It's been a great session, very, very informative, and we appreciate all your help, Paul, Travis, and Brian. It's been a great having you, and our deep thanks. Our commercial, how AirInsight can help you. We're the quiet guys in the industry doing things behind the scenes for many companies, but we specialize in strategies for risk mitigation, positioning people for the recovery, market research, and competitive intelligence. We also provide independent forecasting and market projections, as well as data models and analysis. We're happy to talk to you, and our contact information is on the screen. Next week, we're having an interesting webinar on the softer side of things, building our way out of the crisis, the role of the next generation leaders. So talking about some of the leadership changes in the industry that are going to be required, what the data on the waiting workforce tells us, how experienced leaders can empower the changes and get the most out of incoming leaders. Fiona Mackay is going to lead the session with Emily Whitman from the Aerospace Futures Alliance and Dave Dixon from Crane Aerospace and Electronics. So we encourage you to join with us next week. All of you who attended today will get an email invitation and with an invitation to register. As usual, spaces are limited, so we suggest that you sign up quickly. And with that, thank you all for being with us today. We appreciate your participation and look forward to seeing you all next week.